Yo! Let's get it. Let's get it. This open's going to be interesting. And we popped out, at least in the interim. Get this chart set up here. This area, which really, the expectation after this double top, we swept that daily down, right? We popped up, but the expectation in here was that this high continued the trend. Instead, we got held up here and we ended up flying, coming back in and then flying. So this area is very, very key. We popped into it once. I don't really like this for the low. I do like how it was defended here and went higher, at least back up to this prior swing. We tapped into, looks like the 30% of it. We didn't really trade to the midpoint of it. And looks like we're coming back down to all this volume and volatility. Our pockets underneath of the prior higher time frame swing, which is possible. But looking at this, I think we've already mitigated everything on the way down. Right? If we drew this from here, we're kind of still inside the pocket of your larger swing. So I'm not terribly interested, as the only idea I would have been this low into here, cool, popped up, traded back in, and then left. Awesome. Can justify a long from here. Equally, I can justify a short from here after you get your change in order flow. But as it looks right now, at least on the 1 minute, be interested to see what happens in here. And I don't want to catch a falling knife, because if this area lets go and we actually do want to take those lows here, then we don't really have much stopping us for another 80 points. Maybe this area. That's actually there. It's like way off. Right? So you kind of have these people that are looking at this and wanting to get involved, and yet standard market structure is what? We clear out everything that's not part of structure after the objective's created. And then the task is, well, is this objective done or not? Right? So looking at a lower time frame retracement to go long doesn't really work when you have no structure basically until the origin point itself. And now you're dealing with momentum. Now you might end up seeing this sweep on the 15-minute. We've got a lot of volume in here, so you might get this little sort of pop wherever that ends up being, whether that takes the lows and then you get a move back in, and then we decide if this higher time frame wants to push higher. Like I like this unmitigated zone up top here. And I think the 4 hour supports that. Even if we want to go lower, we'll likely find, you know, after breaking this consolidation, the expectation should be to trade up. Now we tried that here, we failed miserably. You can see that by the 15-minute candle that couldn't close above this prior one. That's very bearish. Very bearish. Right? And we've had 7 straight 15-minute candles. Or sorry, not 15. These are 4 hour candles. You got 26 minutes for recovery. Right? But your trigger is, you're looking at this, determining if it's a higher time frame move or not. In which case, you don't really want body closures underneath. And if you do get that, then your next task is determining what the response is. If the response is tapping into this candle, the last structural bullish candle, and what do you find? You find major selling that occurs. Look out, especially if you're in a bearish trend, which we are. We would have to have broken this high to have flipped bullish. Despite order flow, this is a retracement. When you break that, trade back in, now you're looking at continuation for confirmation longs. Very, very different. Very, very different. Right, so we just grabbed those lows, cool. I think that would have been a major objective for sure, whether we trade back up and have a strong movement or not. You can understand people that will be selling above candles or nervous of taking any sort of movement. We barely got to tap back into that prior zone. I do expect us to go a little bit up at the very least, but I'm going to let some structure form before I look at taking any positions here. Last day of the month, things are going to get spooky. Things are going to get spooky. How's everybody's morning going? Anybody trade London and kill it with Tom? These are fun as well, right? You get this spike up. This technically closed above this candle, cool. But inside the prior one. Many pips and spooky slips. Oh my goodness. Spooky slips. Dare I ask? Dare I ask? Right? So equivalently, if that low is our objective, I'm not too keen on drawing a retracement for us to bounce off of short. I think that's possible, but I'm not terribly interested just in drawing areas on the chart just for analysis. I think that that information should lead to trading decisions, right? You got your midpoint here at 79, cool, of this intermediate time frame zone that encapsulated the majority of this. Right? Some of you guys might have been long from this movement in here after that body closure, but that's more of an advanced nuance. I think that not really wild about this low, even though it did take an objective, which I think was a pretty big one. Right? You're kind of looking at these relatively equal lows here that were extremely important. Extremely important. Right? So everything kind of underneath there didn't really yield a reaction. Right? You have to understand what it's reaching for. Right? And even if this 15-minute closes inside, which they likely will do, you still need a higher time frame response from it to really look at it as a credible bottom. So what we're monitoring right now is this movement up going to look lethargic, or are we kind of gonna tap back in, mitigate this area, and then go? And if we go, there'll probably be a different trade that comes in. We don't need to be at the low, but we do need to be right, especially when you're in such a sharp down move. Right? This low at 52.75, I'm still looking for it. And then if it lets go, we've got that drop basically to 180 that we're looking for. So if we get a higher time frame shove down, then there's not much stopping it from going, assuming it wants to go. But we're seeing some good defense. We're seeing some good defense. Jose making people work. Poor lads. Let's catch a banger, shall we? So this might have not been anywhere you're really looking at shorting. Right? You could justify it, I suppose. But only because of that sweep. But even then, I'm not terribly keen on shorting at the bottom of a range expecting a breakout. That's not my style, right? But even if you're not taking this short, and that is an aggressive short, absolutely. Like even this tap back in, if you analyze price for the same reasons we spoke about earlier, and you get failure in here, like you're expecting lower prices, but that might not suit your system of risk. Risking like 23 points at the bottom of a range for a meltdown. It's good RR, sure. But that's not particularly my system. Because I'm cognizant of the possibility that if we rebound from here, this is just going on a rocket ship back up here. Right, like your morning coffee talk. The markets like to make things very challenging. They like to give 1,000 different reasons for getting in or staying out or whatever it does, and that's not going to change. Our job is to identify the edge that we have, not this is absolutely going to go up, or this is absolutely going to break this low, or this is absolutely going to give me 10 points here. Right? These ranges are formed because there's uncertainty. You could argue here there was a lot of certainty we're going to go lower. I'm sure some people bought underneath this low thinking that was going to be the sweep. Not my style. Right? But there's a reason that people take the opposite trade. Our job's to find the high probability trades with edge and filter everything else out. That's probably the key skill of a trader, is determining the higher likelihood how you do that is structure and narrative. Is the market really rallying here? We've got a body closure underneath this candle, and we look pinned. Does that mean there's zero probability of this trading higher? No. No, it doesn't. Otherwise, you'd be looking at shorting pretty much everything that moves. Morning, Tim. Right? I personally think this goes underneath this low, but I can't justify a trade in here anywhere. Morning, Then. Gotta get some music up in here. Some Halloween tunes maybe or something. I'm so technologically illiterate. It's a wonder I can get this stream up as it is. Bum, 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 bum. This looks like chop, and yet we're in a 60-point range. There's actually quite a lot of money to be made in this for people that enjoy the ranges or that have been shorting every pop or whatever, right? They sold above this candle, they probably made 10, 20 points. There goes that low. Yeah, good question. Very, very tentatively for sure. Now again, we're expecting like death here because there's no structure really to the left. If we don't get that, then this is very, very dangerous for pretty much everybody involved. Right? So people waited for this candle to close. They sold the close of it at 40.75. 40.50, sorry. They made 20 points on that very quick. We've got pretty much nothing in this move until this consolidation where a decision was made. You could argue these little chops around, fair enough, but in reality, consolidation broke, traded up to it. Expectation was to bounce off of it and continue lower. There was a little SNDR that was created here. Full transparency is I'll probably just watch on Tuesday. There'll probably be some really crazy stuff on the order book that goes on. Actually, I don't even remember what happened. What day was the prior election? Election date 2020 was Tuesday, November 3rd. Just for giggles, let's have a look. November 3rd, so that would have been NQZ 2020. Let's see if TradingView can bring this up. November 3rd. November 3rd. Where are you? There was the evening. Just a casual 500 points in the evening. Yeah, so Monday, there's your November 3rd. So in the morning, yeah, a couple hundred points, just chop. And then I guess when the results were sorted, spike, retest, gone. Sweet. Right? Who could have predicted this? Like, one area, that low, not strong, not seeing what we want in terms of what we're expecting. So when you've got this and you get lethargic movement out of it, in fact, you're just basing in here. You're expecting this to go because there's no structure here. Yep, we got this low and this origin to deal with first. I think that, especially the way it's going, I'd be shocked if it didn't at least retest, like, very low. You might get a bounce out of it, so like something like this, and then sort of a even if you get like an SNDR, which will likely be, that's probably the more likely scenario, is we'll trade away from this, but we'll only form an SNDR before we break it. And then that'll be nice because if we build an SNDR here and then you get your larger move, or we tap into it and that gives you further downside if we decide to really unravel today for Halloween. Right. So that actually did sweep, barely. Be interesting to see if this candle forms a bit of a range. To see if we get sort of drop, base, drop, base. Get our little beatbox sessions going in. And then like, we need decent failure here, and by that I mean like a strong body closure and then defense of the area that put in that closure. Then you can look for a move back up to here. Not before, right? Something like this, no bueno. Yes, you got your sweep, but we need something very, very specific or else we expect lower prices. Now, is it possible that we sweep this low and then go? Yeah, of course it is. There's always a probability of pretty much buying everywhere and having it be the low of the candle or whatever. But personally, I don't like to trade off of 25% probabilities. It's probably a lot less. Which is really interesting. Like I still see people talk about streaks. And they kind of look at me like I have 6 heads. Like, what do you mean streaks don't exist? They're a self-fulfilling prophecy. Well, you're an idiot. I said, okay. But I'm the guy who doesn't have streaks. I'm the guy with 2 red days in a month. If. Usually the people that are talking about streaks are the ones blowing up their accounts after they're counting how many days they're green. Streaks don't exist. You either are following your rules, you either trade this way. Why are you counting how many days you stuck to your system? That's your identity now, period. I don't ever hear anybody say, well, I've been walking for 5,000 days now. Congratulations, man. Like what? What do you mean? The second you start talking about streaks, subconsciously you start planning your cheat day. Don't do it. The game's hard enough as it is. I'm seeing some violent buying coming in here, but it's got to achieve something. This candle did close below this, but again, we're kind of running into advanced nuance that we did here. Right? This closed above this, yes, but it closed inside the prior bar. Now you finally got this one, but the immediate reaction was death. Right? So this, not structural, didn't close below here. This one technically did, but yet inside the prior bar. What you'll likely find, this being a range, is that if we trade back down here and respect it, you likely get a second movement that comes back in, because we're starting to see signs that we want to at least retrace a little bit, possibly back up to this higher time frame zone here, that low being 252. But again, this is drop, base, drop, base. These days trying to catch the banger long up. I think we had one of them on, was it Monday? Monday? Not there. Where was that day that we had? Yeah. Everybody was hunting longs in here. Here was your internal structure leading up to where? The prior zone. Cool. Failure. And now our structure is bearish. Our higher time frame's clearly in a retracement. Looking for shorts. Looking for shorts. Not trying to catch the long getting stopped out. Catch the long, stopped out. Catch the long, stopped out. Right? If you see it, take your shot. Cool. Love it. Like something like this. Beautiful. Or you're hunting shorts for the movement back down, and you could be right with the higher time frame. I need to see some sort of a retracement. Ideally, we get something in here, and we get some sort of major failure. I think our pocket of this move is actually up there. Yeah. Could be. I'd actually draw it from here personally, but I don't see a lot of confluence with 248, so I'm going to leave that off. We might get a reaction from it. Might get a reaction from it. Two minutes. 2 minutes to 10 a.m. If this area holds, when you get a very weak bear bar, then we could go higher. but still looking for lower prices. We got that low all the way down here still. No coincidence, it's 100 points down. Right? Is this not easier? Even like here, strong bear bar. Even if you're new to trading, understand that you're in a higher time frame move and you're taking these trades down to the next low. Because what's our fallacy? Our fallacy is thinking, especially when you've been around the block a little while, you go, well, look how far down we are. I don't want to anticipate going this far lower. I'm expecting the retracement. And you'd probably be right. You'd probably be right. Except what? Like, when the higher time frame wants to move, she's gone. Right? Like, we had this prior zone here, and if you were shorting, trying to get back into it all day, what are we talking here? 200, 300 points? Now, I'm not advocating for hopping in and scalping. If you're a swing trader or you're looking for the big move and you're willing to have, like, I don't know, you take a trade in here looking for this and you're up 30 points and you're willing to give that back because your system is that, you know what, I'm willing to take paper cuts or small wins or whatever it is, with the understanding that when I win, even if my win rate's 40%, I make a lot of money. Cool. If that's your system, that's what you've studied, now your job is to stay out of trouble. That key skill of a trader, when to not trade. Anybody can hit the button. The experienced traders know when to stay out. And that's kind of where scalping comes in, where it's kind of born from. Right? People were scalping short here. Even though we're expecting to move back up to here at some point. Because they trade based off of high probabilities. People sold here with a stop above this candle. What is that? 25 points? Risking 25 to make like 10? They made money. If they're able to do it consistently, who is any of us to say that that's a silly system? It's not how I trade. Doesn't mean it doesn't work. Doesn't mean it doesn't exist. Right? The way I trade and the way I teach is I look for failure and I look for structural reasons to get involved. And then I judge based off of the movement whether I expect this or I expect this low to go. In this case, I expected the low to go, so I took a scalp. Many people would argue that's nonsense, trading here to go lower. Take the probability. This closes underneath here, and we get a reaction from the open of this candle in a higher time frame downtrend. This is not the way bottoms are formed. This is, it's not ready yet. We've still got business lower. And how fast are we moving there? Pretty fast. Same thing happened here. You'll notice that the markets tend to have personality. They tend to repeat themselves. They tend to have inertia. They continue doing what they want to do. You'll notice similarities through the day of the personality of the chart. And if you study those, then you can understand what you're looking for in a bottom. And if you don't get that, you can then expect lower prices. I'm not advocating for this trade for the majority of people because this is very heavily narrative based. Structurally, we're looking for that movement back up. We might get it now. Who knows? We got to deal with this fractal first. You could argue a change in order flow above this candle. I'm not terribly interested in that until I have something that's screaming at me, hey, guess what? We're going higher. Why? Because clearly all the large participants are selling. And until they switch, I'm not interested. Now, that said, if we look to the left, what do we got in here? This is a key area. This is probably our last bit of internal structure. We got one, looks like two swings down. We're right in the middle of it right now. I'm sure if we mark this out, that it would align with what we got going on. Surprise, surprise. Just liquidated the low and now we're trading back into the range. Cool. I think the majority should look for deep retracements to get aligned with your current trend. And right now you're looking to see if this is going to be our objective. If we do something like this, right? I wouldn't really want this to come back in, but that might be feasible to mitigate. If it does mitigate and leaves, then you likely get a bounce. You'll get something like this. Trades back in, mitigates. This will be a higher time frame move up to here, right? You might build a little SMDR here to take out this protected high. But again, if we do trade up, it'll likely be short-lived up to here, unless we really go on a higher time frame run for Halloween, which would be beautiful. Right at the origin here without taking the liquidity. That would really throw people for a loop, wouldn't it? But this sort of thing is what I'm talking about. When every single push has been met with strong selling, what do you think higher time frame participants are going to do? And I'm not talking about the ones that actually move the market. I'm talking about ones that their stop losses basically are yearly income. You know, the algorithmic hedge funds. They're shorting. Shorting, and then clearly the market's going nowhere because it wants to go higher. Whether that takes this high or not, we're seeing a change in personality right now. And that's important because typically what you would look for is something here, cool. That might give us a trade back down, which would be that sort of SMDR mitigation we're talking about. If it goes sideways, that's even better than breaking above this high. And then you need this retracement back down to stop, ideally at the midpoint of your new zone, which would then fly higher. What I see a lot with these kind of days, though, is like you get these consolidations that have a little bit of lower time frame structure. That high was 85.75. This closed at 86.50. Technically, this is a swing. But our expectations, and the market doesn't have to do this, is that this low here trades back up, mitigates the prior swing, and then continues lower. But that doesn't have to happen. With higher time frame delivery, you get something like this. And it continues on. You have to understand what weather conditions you're in. So there's your midpoint short. What would be really nice, and again, this is wishful thinking, we allow price to tell us what it wants to do, would be something like this. Although this might, after breaking, tap back into here and then go. Right? Regardless, change in personality. Reaching for an objective. We don't know if it's going to be this or this. We can speculate. And now we determine what happens in here. If we get strong movement and we close above this candle, I think we take this high and then we might reach higher. That would be the market telling me major change in what's been going on here. You guys staying safe? Are we being patient? You understand what you're looking for confirmation longs? Any long right now, any long this morning actually, has been a scalp. Does the current low look like a nice low? No, I mean, not particularly. That doesn't look nice. That looks awful. Nice short. Nice short. It's beautiful, actually. Right? So again, it's like structurally bearish, yes. Retracement's getting sold into. This was sort of your SMDR fractal. We got a bit of a reaction from there, but how strong was the reaction? Is that really what we want to see, or do we want to see death? Pretty much want to see death. Whenever we're short or long, ideally we short and we just get death. That's the optimal. Obviously, the market doesn't work out like that always, but that's lovely, right? And now people with their trend lines are starting to draw them all out. Whatever. You get your bit of a channel going on here. But for reversals, and those in the group, we had a little bit of a narrative session yesterday where you're looking at this low's job in a downtrend is to mitigate the prior zone. In higher time frame delivery, like this low's job was to mitigate this. Well, that didn't really work, right? When do you pivot? You pretty much know here that that's not going to happen. You could argue here, but confirmation is certainly underneath this candle there. Right? Price action theory will call this a wedge. If we get a shove up, this will be the third attempt to reverse the trend here. Often it's not as clean, which could be interesting. Usually you don't get a trend line. Usually you get something like this, and then like something nice like that, and then like this. Or you get like your first one, and then your second one's deep, and then your third one's like that. Comes in all shapes and sizes, price action does, doesn't it? Excuse me. Little Halloween cough. A lot of the inverse bros, they're watching and waiting. They're watching and waiting. They might need something a little bit higher. I mean, this is yuck. Yuck. All right, now you got this high here for that. I don't know. I think it's no mercy short on anything that moves until proven otherwise, personally. Despite all of this, right? And now, same sort of thing, you've got this here, but you've really got to look at how late in the trend we are and how it's moving. So this isn't anything that I would take. It might work, but I usually don't take this one after I've gotten a wedge forming. That's just me. You guys do you, right? In fact, you probably would have made 20 points already off of that. Just not my style. Right? But we can all agree with these moves. What you have to look at is look to the left. Where's the major liquidity formed? Usually these huge candles, they form liquidity pockets, right? They're short-term objectives. What I like to see out of any trade that I take is I like to see that institutional sponsorship, then they run them out, and then the short happens. Either a sweep or some sort of confirmation, whatever. Right, but this is danger territory for me right now. For them from the short side, mind you. I'm not long, but I'm just watching. Boom. When she's ready to move, whether we're involved or not, does she need an introduction? Do you need to ask? Now, whether we trade above this, come back in, right? Ideally, we get a body closure above this last protected high here. Usually when there's higher time frame structure, I like to wait for 5-minute confirmations, right? So if we remove all of this closed underneath here, cool. Last structural bullish or bearish candle. Certainly appears in the next 2 minutes that we're going to close above it. In fact, we're going on a rocket ship. You get your 15-minute imbalance that we're violently trading into. Higher time frame zone up here. Right. This is the higher time frame objective for sure. If we get failure back in here, and now you can determine whether or not you want to take the midpoint at 51 there with their stop below. If you're looking at the retracement back down, say 48 or less, which lines up with this fractal, also fair. Or you want to pass on the long entirely, and you think that we're just going to cascade lower for this low, and you don't really care about where the retracement happens, you're just waiting for the short. All are viable. I think that you might get a trade out of this here if we fail underneath this structural candle. I think that's a little high, and only because of the risk associated with it. But if we get higher time frame movement, then she likely won't trade all the way back down. Remember, we don't need to be early, but we do need to be right. People bought the close of that cheat code. Right? Their stops below. They're expecting rocket ship. Let's see if they get it. This high here for sure, 275 was a target. You might get a trade back in now, but right, so failing above, we expect to trade back down at least to the open or lower than this. You might get your higher time frame area here as we go sideways, but these higher time frame plays can be a little bit tricky to get a hold of and stay in for. Right? If you're following your lows, your stop's actually here, although taking the failure here, it's something else. Yeah, that was kind of our expectation, right? Like, we broke below here, our expectations to trade back in and leave. Well, that changed. Where did it change? Change right here. Right? This low went on a rocket ship. We don't necessarily need to know why we failed here, but one of the more common reasons that we fail higher is because we need to trade lower. Makes sense, right? And now you guesstimate whereabouts. That's not an exact science. We could have just been trading underneath this low. And we're just going sideways here as we accumulate more shorts, and then we blow their faces off. Or we could have double topped here, and we're actually coming for this low now because we have our objective lower still. This is a key area for sure. If we get a body closure above this, we squeeze pretty quick. Right? So that's basically what breakout traders are looking for. They're looking for these surprise bars that occur that change personality, and then they buy the close of them. That close was 69.75. They made almost 30. They did make about 30 points off of this. That candle alone. They're probably still involved, but again, that's not my style. That's a strong body closure. Not really convinced. Be interesting to see what happens here, though. I did short the close of it expecting lower. I didn't really get everything I wanted. It did move 10 points, but it didn't take me out. I had to manually close it. I do think with this failure and the sideways movement, I think that this low put in that high, changing order flow, trade back in. We probably go below this low at 74. But I don't like how violently we just shoved back up. So it was just enough to get me out before really making any coin on this, but it is what it is. Should have kept my stop in. Right. It's these violent pushes as people are covering that that I wasn't liking. I wanted something a little bit more full, like this, after that. But again, this is scalping. If you're expecting like down here or the midpoint of your prior zone. The curious thing is that we seem to be building an SNDR in here. Right? Failing underneath this candle, that's good. Right? Even though we failed above, we got our change in order flow. We don't seem to be generating a lot that I would be expecting. We'll see what happens with this low here at 74s. You can't see my mouse? There it goes. And what do we get? Right? I don't typically risk off of weak lows, and that's for the main, this is one of the main reasons why. That's really weird. Can you see it now? Oops. Yeah, it's probably when I'm taking trades on Top Step or. Alright, so what do we got here? We got your kind of pocket there, but yes, this is a higher time frame move, but I'm hesitant to draw pockets with it, even though it aligns perfectly with this. You might get a bounce out of here. But what you're looking for is you're looking for some semblance of movement, even if that means that we lose it, you know, and that could just go. If it's done, it's subjective. But ideally, you get something like this. I should have held on to that short end. Yep. You know it. Six seconds in this candle. Does it? Great. Okay, I'll move that over again. It's a little bit bigger now. This is our area of interest. We're violently moving back in. I like this for that move. I don't like how we failed. So I'm really holding this area with a grain of salt. Right, I got my trigger of the sweep But this could just be mitigating this, so I'm not giving it a lot of room to move. Right? In fact, that just led to a little bit of death here. And I'm up. Right? This was either going to fly or it was going to drop down and take some more liquidity. It still could bounce, right? We've got a lot of indecision here, but again, this sort of pocket, not really A++ in my opinion. Yes, we broke this high here. I don't like the intermediate time frame double top, especially after this, and now violently back down. Not really what I want to see. Right, you'll notice that we liquidated it 74 by a tick, or sorry, 34, but no semblance of strong price movement. The conservative way of trading is you get a decent change in order flow, ideally a body closure above, signaling that we've now made an internal swing, and then you want that trade back in to be defended and then movement. Otherwise, you get something like this. They could be forming a range, but what would a range down here with a higher time frame low underneath look like? That would be a higher time frame SMDR responsible for breaking structural lows. Give me back my trade. Just enough to get me out of there. We would expect something similar on a lower time frame, by the way. Something like this. Maybe 1 or 2 bars. Just enough to get people involved. Woo. That was violent. Now what? Didn't get a body closure above. This looks like it's trying. Yes, yes I would. Yes, I would. Right? I ideally wanted to see this candle close above that. I took a scalp short in there and I just took it off for 10 points. But I still have a runner going. The stop's above this at 57. Yes, we closed above. Again, what you see is this closing inside this candle. Not ideally what we want to see. I expect that if I'm correct about this failure leading to this low, then I expect to see SMDR forming here. Right? Strong buying at the origin, right above our next low. My runner is for 119. You're doing really well, Forsey. Doing really, really well, man, actually. And I love the questions. Right? So first thing I want to see is I want to see a body closure below this. I got that. Now I want to see this pop. And if this fails, and ideally what failure looks like is it can't do anything above this high. Right? So that might be tapping back into this. That's ideal. Right? And now if we continue lower off this, which would be below this candle, then my stop goes to break even. And that's how I manage my trades, right? So not break even too early, not moving my stop until I've confirmed manipulation and I'm either wrong or I let my trades play to the initial narrative target, which would be an SNDR. We could sweep underneath these and fail. We could come back up. We could do a multitude of things, but I allow the chart to prove me wrong, right? So now I'm break even, cool. Free trade. And everybody who's looking long right now, they could be right. You know, I don't have a crystal ball. I don't know what price is going to look like in 20 minutes. I have a very good idea because of the thousands of charts that I've looked at of the possibilities. But one thing's for certain, if you take ideas based off of price and then you allow price to prove you right or wrong, number one, you're making decisions based off of what price is doing. Not what you think price is doing, but what price is actually doing. We'll see if this takes out my runner or not. You'll notice I'm not getting in here. Is that viable? Yeah, I can understand people's systems that are doing something like that. You've got your failure. Now you're really violently moving away from an area of interest in a higher time frame downtrend. Cool. In hindsight, this looks idiotic to buy from here. And you'll notice as well that I was very, very aggressive on where I was wrong. And the reason has to do with what quality of a setup this is. You guys green today? You guys just sitting on your hands watching? How are we doing? Talk to me. Talk to me. It's lonely up here. 4 seconds. Let's go. Close down here. Let's go. Let's go. Ooh. 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 Oh my goodness. Am I going to be a dick for a tick? Probably. Probably will. Doing really well today so far following my system. Love it. Far more important than the money that comes from it. Money is the outcome. Money is the outcome. but the process. You've got to fall in love with the process. If I see A, then I see B, then I can look at C and D to get involved. Not, let's hit the button and see what happens. Right? Cool, I made money today, but like, boom. Runna, runna. Runna, runna, runna. Could we trade lower to 79? Yes, we could. Yes, we could. Okay? You know where you're wrong. That's for sure. You got 20 seconds on this candle. Right? If we're in a range and we continue to range, you could be looking at 25, 30 points almost immediately, maybe more. Right? Your concern is this SNDR that we're in. And if you're right, you should be right pretty much immediately, because this is now finished business. If this double bottom is going to be your missing piece. Cool. Cool. Let's all send some love to Matthias. Having to watch all the fun from work. Here comes your change in order flow if we're going to go higher. This is if we're going to go higher. Then you should see resistance here, or support, I should say. What do you get? What do you get? Right? So your first thing was you wanted to close above this high. Although this ended up being the candle, which is beautiful. We'll see what this gives us. Ooh. There we go. And follow through. Let's go. Break even at 27s if it comes back down. I want this to run. Okay. Annoying, but that is what it is. That was the violent sweep we needed. Yes, we swept this candle. This traded higher was kind of chopping around inside of it. So I was expecting a little bit lower. We traded down to the open of this and then went. So I hopped in there, and here we are. What do you got going on here? This is all one, so low, high. This, kind of paraphrasing, this closed here, yes, but this actually traded lower. Right? So I think the intermediate change in order flow is actually all the way up here at the imbalance. So very cautious on this here now. We're not really seeing what I want in terms of finished business and done. Right? This was your lower time frame change in order flow if it was going to give us anything, but not really what we wanted to see. Everything happens at 10:30. Well, not today. That happened a little bit earlier. 5 minutes. This is just, you see these, it's kind of a little tricky. We're sweeping underneath. We want to see body closures above these sweep candles. Yes, this one was bullish. That led to higher prices. Cool. We now need to see the trade back in defended. And typically, I mean defended, and then we get a movement. I like that this couldn't close underneath this candle. That's beautiful. Right? But the movement didn't really yield anything. It actually tried, and then it got immediately stopped. And that's when you take it off. Because you're expecting, when these candles form, they trade lower, they take liquidity, ideally, and then they trade through the open, leading to higher prices. That's how expansionary candles are formed. And that works in reverse. Open, trades up, trades through, closes here. And so on and so forth. It's kind of how the sweep model was formed. Right? Yes, you have inducement. Still looking at this as an intermediate time frame SNDR. We've now broken this low. We cannot rally. 79s are on deck. Now, did I actually draw that to that low? I did. Cool. The magnet wasn't on when I was drawing a couple of things this morning, so I'm double checking. Right, now this is actually a little bit different, where people might still sell the breakout, but you've got a lot of volume here, so it's very possible, even if we continue lower, that we trade back up, run them out, and then we go. Or this could be the final manipulation leg, and we just crater. And we just crater, we'll see. Right? This is definitely speeding up. Right, so if this was our SNDR, and that's the second trade that I should have held for a little bit longer this morning. Right, but you guys see my theory of the SNDR being formed here, which is your range right above. You now have your lower time frame SNDR forming a range right above. Price being fractal. It's more algorithmic, so you could, I suppose you could argue that it's institutional in that sense, but those that have been around for a little while, you know that it takes How many times? The normal amount of volume to break out of a range. Or through any level, really. Through any key level. It takes 1.5 times, right? Because why? Because of what we talked about earlier. The markets have inertia. When things are going up, they tend to continue going up. But we know trends don't go on for forever. So what ends up happening? Eventually, the buying dries up from the algorithm. We end up stalling. And then when price starts spooling to the downside, how many people are looking to buy here underneath this low, or here preventing this low from being taken? Lots. So what happens? 1.5 times the selling pressure comes in to offset all of that, breaking through that area. Now they're all offside. Now the algorithm unloads all of that. Right? So on and so forth. Order speeding up is designed to move the market specifically. And we know that retail does not move the market. Bang. Now what? Did we not call this from here? Right? But more importantly, when you're long, until you get confirmation, we cannot look at price being anything more than a retracement. And we have to understand what weather conditions we're in. Right? Higher time frame unloading of price. Not what we want to see here for a higher time frame push. No structure, not what we want to see here for a higher time frame push. This should go through this like a hot knife. It did not, leading to lower prices. Same thing, should go through this like a hot knife. Did not, leading to lower prices. Getting something here, breaking this high, love it. Failure, leading to lower prices. Again, right? So we then ask the question, with narrative, the question is always why. Then we look at structure to build on that question. You could argue in reverse as well. You look at structure and then you look at narrative, but in reality, they go hand in hand. Right? Where you've got this failure structurally, and now you're looking at why. Well, if we're not going higher, we're going lower. Whereabouts are we going to? We go into this low? Possibly. But what are we actually reaching for because of this higher time frame direction? Higher time frame objective. Then the question is, structurally, what do we need to do in order to achieve that? Right? So we look at this being a higher time frame SMDR. We then have our lower time frame SMDR underneath this. That comes first. That structure, that narrative, that comes before any trading decision you make. And then you'll notice that entering actually becomes a lot easier. Now you're looking for areas of interest to get involved. You can use structure for that as well, depending on your aggressive level. If you're extremely aggressive, you're likely shorting around the same areas that I am. Personally, I don't think there was a great long out of this. I'm sure Tom crushed one, but he crushes everything, right? What I look at is we've got this strong movement up, put in this high, that high put in this low, that low broke, failed, yes, but then what happened? Change in order flow here, which then retraces back up to the pocket of this current swing or the midpoint of the prior one, and your stop's above the high, expecting that to now be manipulation. And we expect this to deliver. It did. Obviously, I could have traded that a lot better, despite being on the right side. So you're looking at, oops, you're looking at this, right? High 90s. I think my entry was 95s, right? Here's your midpoint of the prior zone. That's actually 88. And then the same sort of thing. You're looking at structural candles. Or an advanced nuance is actually areas you expected to hold on the way down, right? If they would have held on the way down, I think a lot of people bought in here. So when we knifed through, where's an area to look for an inverse trade? Right back up into it. That's a model I haven't really taught or looked at. There's videos on the inverse SMDR that we've talked about, but in reality, I suppose you could have looked at it being that as well. Right? This being an SMDR that snapped this area, which was responsible for putting in this breakout structure. But these areas, like, it's very narrative heavy, right? All areas of entry and confirmations are very narrative heavy, because otherwise you're just taking the same pattern and you're only trading patterns, you're not trading price, which is what I really want to avoid as somebody that's trying to teach people how to get payouts, right? This is nasty. We've taken that low. We're not knifing through, which we would expect. We are seeing selling pressure, but that could have just come down to mitigate. If this cannot die before the 11 o'clock candle, I think that we trade up higher into this SMDR. And then if we come up, we build something here, and then we take it, you now have a key area of interest. If this SMDR holds, right, we build something here, we then leave, trade back into it, and it holds, then we really look at higher prices, and you likely take these highs. At minimum, you're looking at 60. Right? The bearish theory is we trade back up to this prior area of interest and we fly. Like fly. Right? This area needs to break for any sort of intermediate bias to be to the upside. Period. So depending on your systems, you can look at maybe a long into it. I think that's risky, just based off of higher time frame delivery. But if we consolidate here, then it's kind of a coin flip anyways. Last thing is that I'm opening up our server for post-market. So we'll kind of review the day and everything like that. We're giving away a whole bunch of different stuff. We usually give away some take profit accounts and some strategy calls where we've actually helped people. I think the last one that I did, the gentleman got his first payout, which is pretty cool. And then we'll give away a couple of monthly memberships as well. So the Discord link is in the video description or on our channel. Love to have you guys there for some for some memes and some fun, and there's a lot of different education stuff for free in there as well. But yeah, we have a little bit of a fun giveaway game, and that'll be around a little bit before market close, so I'd say around 3:30 p.m. And then it won't go too long because I know you guys probably want to get out and get into your costumes for Halloween if you're a nerd like me. But yeah, hopefully you guys did well this morning, and we're going to stop the stream here. I'll probably hop on in the afternoon, but we'll keep this going. Reach out with any questions, comments, concerns, or criticisms, and hopefully you guys bank today. We'll see you later.